Ted, want to start with you. Walk me through the reality of what could be happening in China.
Well, I think it's, every big reserve holder examines what its strategy is continuously, and they may be marginally adjusting their investment strategy. But I don't think the notion that they are dramatically changing things and are prepared to announce the big change doesn't make any sense, because the market would move against them and they would be shooting themselves in the foot.
So Ted, take us into their mind if you can. They have a fairly substantial surplus in their trade deficit. They have a substantial surplus. Right. Where would they put the money if they didn't put it in U.S. Treasuries? They can't put it on their mattress.
No, they have to put it somewhere else, and indeed they have been in this very small way over the last year. They have been buying. They have increased their holdings of U.S. Treasuries, even as their reserves themselves have been unchanged. They have been the reserve position of China has been under some pressure because of some capital flight, even while they've been running a trade and current account surplus.
Hey, Kathleen, part of the issue that came up yesterday was perhaps that this was a signal to D.C., a signal to President Trump, a warning shot. But then you wind up buying at that 10-year auction, and now you have yields back at 254. Did the signal fail?
I don't think it's a signal.
Hang on, Ted, 1 second. This is for Kathleen.
Thanks, Alex. I do think that there is a signal there for the markets that the path of least resistance is now to go up. I do agree with Ted, though, that the news out of China was more political posturing. If we look at the market action towards the end of the year and what we've seen early on in 2018, it's really the decisions of the ECB and the BOJ that are influencing the rate markets.